So hi friends, today we're going to cover a microcap company for which the management has provided the growth guidance of 3x top line growth by the year 2026. The company has been diversifying its product portfolio. They have been pivoting the theme of the company to small farm mechanization. They have been doing global expansion. They have been expanding distribution all across the country, and all that they have done while registering a growth of 20+% rate in the last few years. They are also going to benefit in terms of consumer behavior change and the macro factors that have been evolving in their favor. We are going to understand the business in detail, look at the financials, and also understand about the growth story that can pan out. So the company that we're going to talk about is VST Tillers Tractors Limited. Starting with the brief introduction of the company. So the company has a legacy of more than 50 years. The mission is to drive farm mechanization and empowering the Indian farmers. Core strength have been that they have been largest manufacturers of power tillers and four-wheel drive compact tractors in India, and they have been providing innovative products and solutions to the agricultural industry. The growth strategy is that they're building pillars to accelerate growth. They have been expanding globally. They have been going to international markets. They have been diversifying and expanding the range of the product portfolio that we're going to see in the next few slides. And as the theme of the company is evolving, they're focusing more into niche segments. The company has a market position. They have a dominant market share of more than 58%, along with the established presence and widespread dealer network of over 500 dealers, specifically for the power tillers. These are the core values that the company abide by. So they have three manufacturing plants. Looking at the locations, you can understand that they are mostly concentrated in the southern region. So VST Tillers and Tractor Limited operates three manufacturing plants, one in Mysore, Malur, and Hosur. So currently, all the facilities are underutilized and they're running at around 50 to 60% capacities. For example, the current capacity is to produce, in the current capacity, they can produce 30,000 tractors, and currently they are only doing 8K to 10K. So the first goal is to reach the capacity utilization for all these plants. Coming to the network, so in terms of the dealer networks, they have so in terms of retailers, they have 4,000 plus retailers. They have dealers for small farm mechanization around 660 for specifically for tractors. They have 355 dealers. Looking at the concentration of the dealers from the map, we can understand that they're more focused on the south region, and they are working on tapping on the northern belt as well. And this is one of the points that have been discussed in the con calls. Covering the product categories in little brief. So they focus on tractors, they focus on farm mechanization. They are now expanding on distribution. So they're doing spares, engines, lubricants, electric pump grease. Electric pump is only a trading business for them. They have farm implements as well. So around 50% of the business is coming from small farm mechanization, 35% is tractors, and the rest form the 15% business. Now we'll cover the key market growth drivers from top level, and the opportunities currently that we can see is so there's rising demand for food and government initiatives. So increasing food demand creates opportunities for agricultural machinery and manufacturers, and there are government initiatives to provide food grains to marginalized populations that will contribute to higher food demand. There's it's seen that there's higher acceptance of innovative products and technologies. So technologically advanced machinery with improved productivity gains, acceptance among farmers. The farmers are willing to invest in modern equipments to achieve higher yield and improve the current output per acre. There's also increase in the availability of credit, and there's also growth in contract farming. So increase in contract farming provides opportunities for farmer to produce higher quality crops, and contract farming would offer them technical and financial support, which they can utilize to basically get more equipments, modern equipments to increase the output. In terms of the threats, the rural infrastructure is still lacking in terms of in terms of proper availability. Improvement and investment in rural infrastructure are required to support effective mechanization of agriculture, and that is something that government has to take. Still, a large part of small farms, small farmers, they depend upon monsoons, and there are climate risk in the business. So the country's agricultural sector heavily relies on rainfall and making it vulnerable to changing patterns of climate. And insufficient rainfalls during the plantation season can have adverse impact on economic activity in agricultural sector and related industries. Now we'll quickly move on to the financials. So if we see financials from top line, they have first time it's that they have been able to reach the milestone of 1,000 crores revenue, and they have been registering great growth. In terms of the sale volumes, we can see that apart from tractors, all other segments have performed exceptionally well. There's more focus that the management is putting on growth in terms of power weeders and other smaller categories. Moving on, if we look at the efficiency ratios, we can see that this receivable days have increased significantly, and this is something that was actually discussed in the conference call as well. So the management gave a clarification that about 20 days in the receivable days was attributed to the subsidy release of the volumes that came from the government orders in the month of March. And because this payment were released in the month of April and May, hence the increase was registered at the closing of the year. But ideally, the increase would have been around 33 to 34 days as per the management. And but going forward, they are targeting the receivables to be around 45 days. So that's the expectation that they're setting. Apart from that, all the other ratios, valuation metrics, they seem pretty in reasonable. So VST has a strong financial profile. They don't have they have nil debt, and they have sizable balances and liquid investments as well. Again, so percentage increase in receivables, CFO upon PAT and CFO on EBITDA, all of them have being impacted because of the government order and because of the delayed release of the payments to the company. But as per the company, they have received the payments, so that would be factored in the next report that we'll see. Apart from that, there are no other red flags. So in terms of capex, the company has capex plans, but they're not in terms of building more capacity, as the current capacity is also underutilized. We have discussed that. Around 50 crores is allocated to develop the Global Tech Center, which would have a lab specifically for focusing on the electric tractors, and they have actually become a supplier to a leading electric company that's selling tractors in the United States. And they are also getting into electric tractor space, where they will manufacture and supply to the global markets, and hence the investment would be in product development for the next 2 years. Going forward, the minimal capex requirements, and because of the healthy cash flow generation, the liquid investments that they have, and zero debt status, the going seems very favorable. Um, in terms of the tractor business, what we what we saw was around 20% of the tractors were exported, and the management is expecting 20% growth in the tractor business. And this growth would come mostly from the international expansion to US, Mexico, and domestic, and some from the domestic business as well. Now we look at how the trends have been changing, and what can actually support the growth story for VST. So essentially, majority of the Indian farmers, they have less than 5 acre of land, around more than 85-90%, which necessitates a small and affordable farm mechanization tool. So these small and marginal farmers, they cannot afford to buy expensive equipment, and either they have to put it on rent or they are keen on buying reasonably priced farm equipment, right? So thus the demand for small agriculture machinery is growing, and which can be attributed to the decreasing rate of per capita land holding in Indian context. Second is that farm mechanization also plays a critical role in sustaining growth in agricultural growth, and because currently in India half the population relies on agriculture directly or indirectly, and labor shortage is something that acting as a pain point currently for the sector. And the biggest drawback for agriculture growth is the labor shortage at this point in time. So essentially, the small farm mechanization equipment market is expected to grow in the coming few years. And in the recent few years, there's also a higher expectation of the expectation of higher yield have also increased. So the farmers want more yield from the same amount of land they've been holding, and hence some mechanization is something that becomes more critical. And in terms of the union budget, also announced substantial investment in agricultural sectors, and estimated budget of 68,000 crores for PM Kisan, while all other programs from the Ministry of Agriculture and Welfare Associations, there's certain amount of interest subsidy and crop insurance have also been allocated in the budget 22-23. Third is so the next thing is that what we can see and what we could also what I could also understand from the conference call is currently the trend is changing in terms of the business they used to get from subsidies, and the consumer behavior in terms of getting the subsidy and how they used to get the subsidy is also changing. So earlier what used to happen was central government scheme would basically would be released in terms of having a certain amount that has to be given to the farmer at the end level, and then the funds are allocated to that on the central level. Then state governments actually introduce, and because of the executions, the implications of the policy at state levels at different state levels varies. So what has changed in the last 5 years that currently no customers are actually waiting for the subsidy to come. Earlier, what used to happen was that the subsidy used to come directly to the retailer where the sale of the equipment is happening. But now, due to direct benefit transfer, the subsidy directly goes to the farmer. So what happens is earlier they used to wait for the subsidy to come to actually make that purchase, but now because the farmer is actually sure about them receiving the subsidy directly in their bank account, so the farmer is confident that he'll anyways get that subsidy as a direct benefit, and he's not waiting for procuring the power tillers from the dealer, and hence the growth in the power tiller segment is expected. Since direct benefit transfer is there, it does not affect purchase pattern at all, because customer is buying when the need is there, and he's putting the application to get the subsidy because it is available, and so the deciding factor for him to buy is not the subsidy now. But the point of concern is that still the quantum of subsidy is volatile, depends from state to state. If you see, the quantum has not changed. In fact, every year it has been going down. So subsidies as amount to the end farmer customer is decreasing, and that is something that can actually impact. But then again, the bottom line is that the farmers are focusing more on the application part, rather than if they need it, they'll buy it and they'll apply for the subsidy later. Some of the management guidelines that we'll actually look into is that they have a vision of company's growth, top line growth to 3,000 crores by 2026, and currently we are somewhat at 1,006 crores. So in the last 3 years, the company has achieved an impressive 20% growth, and they envision the growth rate to 3,000 crores. And for them, they have decided that the margins would be currently the guidance of the margins have been given to around 11 to 13%, because a lot of investment would be done in the electric segment in terms of product development that we've already discussed. They are expanding their product portfolio as well to actually achieve this particular mark, and essentially it has to the growth rate would come over 30%, and majority of the segments, as we have seen in terms of volume, have grown even when there was challenge in terms of raw material pricing, and but still they have registered growth in terms of in terms of volumes. And they are positive expectation for the tractor business. They have positive expectation in the tractor business in the coming year, and the company anticipates favorable performance and growth in the segment moving forward. They are also positive about the power tiller industry growing from 60,000 to 1 lakh by the year 2025, and this is again because of the factors that we have already discussed. And so they, because they are the market leader in this particular segment, and they are increasing more on the distribution as well. So essentially, they're expecting a growth from this particular segment as well. There's growth expected in the power feeder segment, and in the segment that they have currently registered a growth from 2,000 to 3,400 units. This is something that depends majorly on distribution. The procurement for this product is a near store procurement from the farmer, and the distribution spreading for the sales of this particular category is expected to grow, and the management is expecting around 10,000 to 15,000 plus numbers in the next 2 years. And currently, they are only getting around 3,400. So major growth expected in this particular segment as well. Right to win for VSG. So we'll see as to what are the factors that makes this company strong in terms of why, if even if the market is expanding, or why would they be the one who will be maintaining their market share, or how why they would have additional market share from the competitors. So they have shifted on small farm mechanization. They constant focus on strengthening portfolio for small farm mechanizations. They are adopting the 5S strategy: awareness, availability, accessibility, affordability, and ability to gain dominant market share in the segment. They have been excessively focusing on creating more distribution strength, and they have constant innovation and product development focus as well, which is essential for the company to be successful. They have introduction of higher power tillers with the ride-on seats that has made it more user-friendly, aiding in its faster adoption in the farm mechanization. So this is something that's very unique to this particular company, that they have a higher power tiller, which have ride-on seats as well. They have very simple and easy machines to use. So VST manufacture machines that are easy to use and convenient for small farmers to operate. In terms of some of the other multinational companies' offerings, which are very complicated for a small and marginal farmer, that becomes very difficult, and hence the farmers would prefer VST's product. Company manages the channel inventory efficiently, and they work on retails and do not build channel inventory, hence maintaining the 20% growth rate. So even in the last few years, they have maintained the channel inventory effectively. The small farm mechanization business is mostly focused on east, south, and west that we have seen from the dealer network. The north is a very big opportunity, and they currently have 660 dealers. In the next 2 to 3 years, they are targeting more than 1,000 dealers in the entire country, and much of it should be coming from the north. Now, what are the factors that can go against the company's growth, and the thesis that we have discussed? So essentially, they're still exposed to cyclicality in industry with strong linkages to agriculture production and monsoons. Around 80 to 85% of the earnings are still coming in from the tractors and the power tillers. Hence, it's exposed to cyclicality and owing to dependence on monsoons and crop production in the country. Um, there's considerable amount of dependence on subsidies for the power tiller segment, and susceptible to state government policy changes, because the policy actually is impacted based on how the state government is executing that policy, and hence it can actually affect the sales from coming in from certain key states. The tractor and power tiller segment are characterized by intense competition, thus limiting the price flexibility, and they can't pass on the fluctuating input costs. That is what we have seen in the past, that even though they have been able to register growth on the top line, their margins have deteriorated, and currently they are having around 8 to 9% margins, which they are saying that they'll get to 11 to 13, but that is for the time to see. There are environmental considerations. So tractor OEMs are exposed to adverse climatic conditions, such as droughts, floods, etc., and they derive major proportion of their demand from rural segment that may be impacted by such environmental factors. Now, in terms of what we'll do is that going forward, we'll keep a tab on how the execution of the guidelines have been in the place, and is the management going to deliver or not. So the next report that we'll see will check on these few pointers that they have been able to maintain the receivables at about 45 days or less. The management is expecting 20% growth in the tractor business, and the growth would come from international expansion and some from the domestic market. We'll see as to if the tractor business actually registered that growth in the next year. Uh, so the Zetor brand currently, it's a new brand by the company, and it has the application for subsidy by the government. It has been submitted by the company. In case this gets approved or not, that would also have a lot of impact in terms of the sales that would come from this particular brand. This is from the power tiller segment. Companies entering larger markets with compact tractors where the demand is higher than Indian markets needs to check on how it performs. So they are essentially getting into the US markets where the hobby farming is more, and they would need more. The market for compact tractors is more, and to see how compact tractor segment is growing and the numbers that they have actually been able to receive from entering into this particular markets. Currently, the dealer network of 660 domestically, and most of it is not from North. So we'll see as to how they are growing their dealer network. They ideally should get to 1,000 in the next 2 to 3 years. But then again, we'll see as to how much they're expanding in the North, and how the numbers also remain intact after they expand. Its ability to claw back this market share in tractors, supported by portfolio and network expansion, it remains critical to diversifying and strengthening its business profile further, which needs to be monitored. So currently, tractor segment saw a little dip. We'll need to see if they again get its market share back in the tractors. So this was the company in brief. And going forward, we'll keep a tab on the company as to as to how they're executing, and we'll come up with more videos for on this particular aspect. So thanks for watching.